What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is November 9th of 2022. Well, folks, I hope you are having a fantastic day wherever you are, because in today's video, I've got to do a little bit of a rant and rave on the current state of the crypto market, as Bitcoin made its biggest down move since back in June, setting in new lows for this bear market around $17,000. We've got to talk about what happened, my current thoughts on the situation, and on top of that, where we think price is going. And I gotta be honest with you all, I understand everyone's tight on time, especially during the bear market, but if you guys have the time to listen to this video, out of any videos that I make this week, this is gonna be the one you wanna listen to. And if you happen to agree or like with what I have to say, drop a like. Let's go ahead and kick off the conversation. So I want to dive back into price here in a little bit. We can obviously see that there's some severe ramifications when it comes to price setting in new lows, kind of canceling the chances of this being a consolidation pattern here for Bitcoin. You all know we've been bearish on Bitcoin, talking about levels like 14K and 10K, and we will get to talking about that later on in the video because I feel it's going to get much more worse before it gets better. And I think that those target levels are very reasonable after yesterday's news. So what happened here to cause Bitcoin to drop so severely and fade its gains from the past couple of weeks? It has to do with the news that came out from one of the largest cryptocurrency exchanges, FTX. Now, for those of you who don't know FTX, or Sam Bankman-Fried, or SBF as he's commonly called, Sam and FTX have been leaders within the space when it comes to derivatives products. So FTX mainly focused on tackling a lot of the inefficiencies that existed for leverage trading. As you all know, we're very against here on the channel. We've never promoted referral links for. But many of you have probably heard me talk about these leverage-based products that allow you to go 5, 10x, or some kind of multiple on your investment on cryptocurrency assets. These are derivatives products. And FTX really nailed something good here. I have some positive things to say before I get really to the negative stuff. Sam is an incredibly smart guy. I got to meet him back in late 2018, early 2019, when he had at the time just begun starting FTX and was also running Alameda, his fund that he had. And essentially, he's a very smart guy. He understands financial markets. And on top of that, FTX as a product was really good. No matter what you think about derivatives and leverage trading, I personally hate it. I don't promote it. I think it's a bad thing. Overall, he built a better exchange than BitMEX, which had a lot of issues at the time. A lot of the things that we addressed on the channel. And I always love seeing people improve business models. And that is what allowed Sam not only himself to become a billionaire through building FTX as a multi-billion-dollar exchange, going out and acquiring major companies like BlockFi, going out there and building various different products, and also building up his fund, Alameda, to do a lot of venture capital investments throughout the space. He had become a world-renowned player in the crypto space. But unfortunately, he and the team and the leadership of FTX fell into the exact same trap that Celsius and Voyager and BlockFi and many other companies fell into, which was likely, while we don't have any direct confirmation of this, likely under-collateralized lending. This has left FTX in a position where CZ and the team at Binance have had to come out and acquire FTX for a much cheaper valuation than the tens of billions of dollars it was worth back just a couple of months ago. Now, I want to go ahead and talk about why I'm so confident in what I'm saying here, even though we don't have all the details yet. Got to be honest with you all, there is clear proof that FTX was either under collateralized lending user funds on its exchange without letting them know, or B, they were using that money to make risky investments in venture capital or speculate through DeFi yield farming, you name it, similar to the situation Celsius got caught in. And the only reason we know this is because right now the situation is very clear, as Sam states in his tweet, that there are more creditors owed liabilities than the amount of assets they have. They have had a liquidity crunch, because you can't have a liquidity crunch essentially in the case of FTX if there are the funds on the platform. It's an exchange at heart. And for users who maybe are lending funds or borrowing, in that case, maybe that's a bit different. But users who are just simply trying to withdraw from the exchange, where their funds should be sitting in cold storage, right? According to how the experience lets you know about how those funds are being utilized on the platform, they should be readily available for withdrawal. You pay your withdrawal fee, send it to your wallet. Unfortunately, they've had to pause withdrawals similar to Celsius back in June. And this means that FTX, one of the titans in the industry, which had advertisements with Tom Brady and had huge stadium deals, unfortunately, all bust, all gone. And now CZ and the team at Binance have to come to the rescue. Now, I want to go ahead and just share my thoughts on this. I originally, outside of the DataDash YouTube channel, I've also had my own startup in crypto. I had a crypto wallet. And I got to tell you all, I could never for a moment think it's okay to utilize user funds for something else than its original intention, right? And what I mean by this is that I can't even fathom this idea of taking user funds and going out and lending it out there without users' consent, especially under collateralized lending, right? It's one thing to lend out funds and have the borrowers pay a higher degree of collateral. This is usually if they want to get more exposure to an asset or just take out a short-term loan in stable coins or dollars, right? That's a standalone great business model. It's what Celsius had originally. But unfortunately, they all got in the business of favors for one another, lending out to one another to try to get more yield, to get more generation of crypto on top of the base principle that they had within their exchange reserves as if it were their own assets. And that is the problem here. There was a lot of people who owed a lot of people money and no one could pay up. That is the game here. This is the same thing that happened back in 2008. And as you can see, this is a really interesting chart. They've discontinued it since 2017. But you can see back during the buildup into 2008, interbank loans, or interbank lending, became a huge market, about $500 billion in sitting loans at the peak of 2008, collapsing all the way down here to $65 billion. Now, bear in mind, these are big established banks that aren't speculating on altcoins or venture capital projects or, for that matter, trying to speculate on the price of Bitcoin. And they probably have ample collateral and liquidity and reputation behind them. And even they succumbed to this huge collapse in the financial system, a system of distrust where even years later, 5, 10 years later, banks don't lend to one another. And we think that this is okay in crypto. I'm not saying we, I'm saying the leadership of these companies. They thought that that was okay. I'm sorry. I mean, this is a big red flag for where the industry is going to go for the next couple of years. We have got a brutal wake-up call. And if we think that it ended in June, we got another thing coming. This is wrong on so many levels. And, I got to say, I want to just say right now, for those of you who might have had your funds in FTX, we never promoted FTX here on the channel. We never had referral links for FTX, for Bybit, for BitMEX, who, by the way, make the majority of their revenue, candidly, from liquidating you and your money. And the people who benefit are both the exchange and the content creators who promote these type of platforms. That, to me, pulls in my heartstrings because I know that there are a lot of you out there who had everything in crypto on one of these platforms or on a leverage bet. And that makes me furious that any kind of corporate company in the space would allow for something like that. And it's what we're seeing play out right here in price. And I gotta be asked again, guys, everyone's got different opinions on it. If I'm putting my 2 grains of salt on it, or my 2 cents, well, I mixed up acronyms there. If I'm giving my 2 cents, right, take it with a grain of salt, I gotta be honest, I think things are gonna get a lot worse here. Because if Celsius and FTX, if Voyager, the companies who I really saw as reputable, as many people saw as reputable, right? I don't think anyone really saw this coming, say, back a year ago. If these companies are going bust, who's next? What about Bybit? Did Bybit, who made its money, made so much money, could have just sat there and made so much money, right, from liquidating users? Are they out there speculating with that money? Are they in a position where they don't have the ample collateral? If an exchange that really was taking in deposits and could see those deposits as direct revenue or potential profit, right? If an exchange like FTX, where they made so much money from that, is now without enough assets to cover creditors' liabilities? How bad is the situation here? How bad is the contagion in the space? It's a tragic moment. It's a sad day for crypto, guys. And again, what happens here is that when you're talking about institutions, people say, oh, institutions are going to get back into crypto markets. They're going to buy the dip. I got to be honest with you all. The first thing that institutions worry about getting in crypto is custody. They don't want to manage private keys. They don't want to do it themselves. They want to trust someone to do it. Now, there are still some great names in the space, and I hope that they are in a good position, like Coinbase and Binance. Brian Armstrong and CZ have been some of the more consistent figures in this space, and they seem to have a long-term time horizon and continue to be passionate about what they're doing. But again, you have to think about this. If you're someone who, for example, is running a major hedge fund or some kind of major department in finance, right? Some kind of big entity with a lot of capital, do you feel like putting money in this market? I understand it's a good dip here, right? Price has gone down a good amount, but we haven't even seen the typical correction of most bear markets. And the real big question is, where do you put it? Who can you trust with such high degrees of money? Maybe funds, maybe personal investors can afford to lose their money like this or take on that risk. When you run major funds or investment vehicles, you have obligations to your shareholders. You have obligations to your original investors and funders, right? You can't do the kind of stuff that's been going on in crypto here. And this is the kind of stuff that really takes us down to our target levels of anywhere from around 12,000, 10,000, 14K. I think at a minimum, we're going to 14K here over the next couple of weeks. I don't mean to be too doom and gloom here, but once this momentum sets in, the fear of contagion builds in, guys. And again, I think since back in June, we have learned if you have your funds on an exchange, not your keys, not your crypto, right? Funds on an exchange. You got to understand that in this situation, in this market, unlike during the bull market, there's a lot of risk that you may not be able to get your funds. And I would withdraw them ASAP. I would get them off of exchanges ASAP, put them in to a software wallet, hardware wallet, any solution that you have readily available, and make sure you have that seed phrase written down. I know it's a burden. I know it's confusing. Watch a tutorial or two online. It could save you your entire portfolio. Because right now it is very risky to have your money in exchanges. And I'd say the same for Coinbase and Binance. While they are definitely, it appears much more reputable, have not had the same liquidity crunch, Coinbase being a US-based company, feel much better about them. I'm still worried at the end of the day whether or not they're going to be able to compensate for users who need to withdraw, if there's going to be that liquidity crunch. And it's also about just having availability of your money. Even if things get worked out in the end with FTX and Binance, where hopefully users will have their funds, still, it's best to make sure that you can withdraw at any time. You can sell at any time. That's what's most important. Now, we got to talk a little bit about price action. This is really the closing subject here, and I don't want to take up too much of your time, guys. But there's a lot to be concerned about when it comes to price. I mean, I could tell you my target levels like I did earlier, but just think here again back to what we talked about. Contagion. Who else out there? Who else out in the market is under, I guess in a sense, who has more debt to creditors than actual assets on their books? How many people are in that situation? If FTX and Celsius, two of the titans in the industry, were in that position, who else is going to get knocked down by this effect? And on second thought as well, there's another thing we got to consider, Mt. Gox. I mean, if I was someone from one of the creditors of Mt. Gox from the previous exchange hack who is sitting now and watching this price action play out, if I in the near term were given any opportunity to withdraw my assets and sell them, I'd be taking a good amount of that opportunity to do so. Maybe hold a little bit, but probably sell a decent amount, especially if when I bought those Bitcoin was at a couple $100s. That's the kind of stuff, that's the kind of sell pressure that's going to be able to knock us down to 14K, 12K, 10K, you name it. It could be worse. This is the first time Bitcoin, and I tweeted this out on Twitter, I put out a tweet stating very clearly, that this is the first recession. We've talked about this for months since we took advantage of the relief rally in August. I know a lot of people want to buy the dip, you want a dollar cost average, but we are going through the first recession that Bitcoin has ever experienced. Bitcoin wasn't around in 2008, right? It didn't have liquid markets where people could trade it. It only really started in 2011 to 2013, and even then it was in its infancy. What happens when Bitcoin goes through its first recession? And I think we can already see here, if we take a look on the long-term chart, turn off our indicator. Actually, we'll keep our indicators on here. We'll turn off our drawings. We are, for the first time, for multiple months, tracking below the 200-week moving average. That has never happened before in Bitcoin's history. I will keep beating it like a drum because it's a significant thing in markets. And it's the same thing that's happening with the NASDAQ. 200-week used to be a perfect buy the dip opportunity, and now it has been acting as resistance for the big tech stocks. We've got more pain to come, folks. Much, much more pain. And it's why we will never promote referral links to these exchanges that promote leverage trading and derivatives. We will always be as candid and as honest here on the channel, even though it's not to my benefit for the market to go down, guys. You know this, right? At the end of the day, we're a crypto channel, but we also do cover the macro elements here, which is why it's beneficial to stay tuned. We're always going to be keeping an eye here, watching the trends, and that's how you guys can know when we might be finally starting to see bottoming signals in the market. And I'm going to do my best here through bull and bear markets to always be here with you guys and try to help navigate these crazy markets, especially during times like this. So if you happen to enjoy the video, consider dropping a like. To all of you out there who have been affected by this, I wish all the best in dealing with it. I hope that the situation with the acquisition from Binance will allow for users to get back their funds, or a majority of their funds. That would be really a really wonderful scenario, but we'll see how it plays out. Until the next time, everyone, thank you all so much for watching, and I'll see you all in the next one. Take care, everyone.